Let's talk some options. Mr. Kevin Green coming to our rescue here on a Friday with 27 minutes left. KG, is there any hope for the Gamma Goon melt-up?
No, I mean, maybe. Anything can happen right now.
We got 27 minutes.
Yeah, we're in a negative gamma situation right now, Oliver. This is actually kind of the first one that we're seeing in real time since we kind of started doing this. So what's actually occurring right now, as you can see on an S&P/X minute chart, is just continued selling to the downside. We had some key
we're getting
areas
smoked
that
right
were
now.
focused. Yeah, exactly. Let me. So this morning we kind of talked about several different areas. The 5,500 level, obviously we've been talking about that all week. There's a call wall there. We broke through that this morning, and then we had another level at 5,525. We pretty much faded that area, came back, tested that 5,500 level, stayed there for, I would say about maybe, 30 minutes, 45 minutes, and then we broke to the downside. That wasn't really the problem until we got to around 5,480. That's the negative gamma area that we have on that chart. Once we got to 5,480, you would expect that dealers would have came in and started buying, but that really wasn't the case, Oliver. We did not see dealers really pressing that move here because of the fact that beta was being burned off. But here's the thing. What we are seeing now is a situation where dealers are selling along with retail traders or institutional traders, and it's pretty significant. So you want to see them kind of bid this thing back in, because right now, even if you're looking at the 5,470 strike, there's about a $47 billion worth of risk that they have for every point that the S&P 500 is going down. So that was right before we actually kind of got on, which is why you saw that continued selling to the downside. 5,450, maybe that can hold. Let's see. But you want to be able to see a sharp buyback and then hopefully a melt up. But right now, this is kind of not the situation.
This is more like holding on.
Going into the close. Right. We're trying to hold on.
Yeah.
And basically breaking below 5,468. 5,468 is the line in the sand where it kind of opens up these floodgates right now.
Let's go back to that intraday chart for a second, because I think it does a good job showing where we bounced right when we hit that negative dealer level. So we wicked down into there and came right back. I mean, literally as we have been talking here. So the first test acted as support, which is exactly what you would be looking for. Now, if we keep testing, right, might change, but at least we kind of know that level seems real, because as soon as we slip below, we popped right back up.
Exactly. And so if you were to be a dealer, so here's the scenario that we have right now. We're sitting at 5,459. Is it realistic that we could actually close at 5,480? Yes, because there's a lot of longs there on the put side, so those dealers could actually bid this market back up.
We were there an hour ago.
Basically try to move the premiums down. That would be your first hurdle in order to try to get over, try to see this kind of run up into the close. And then the next one after that would actually be 5,500. So this is, once again, a unique situation. It's not a massive sell-off. It's only 0.4%, but it's something that we haven't seen all week. So we also have to kind of take that into account as well, as we are kind of monitoring these trades going into the close. We did talk about earlier this morning, the downside risk was 5,460. So, you know, these levels have actually been working out for the most part for these guardrails. Let's see if it's going to be able to maintain itself here for the last 30 minutes left to go in the trading day.
Yeah, no, you're right. They have worked pretty well, the way we got the support there. And then now it kind of gives us an area to think about as maybe the target for the day. Like, how do we measure success? I like to think about these levels now as like how to measure success. You know, similar to like when you have an implied move in options for a stock before earnings, and it's like a 10% swing, and it drops, but only drops 6%. It's like, okay, people thought it could have been worse. So in this case, it's basically if we could get back to the 5,480, the neutral, all right, fine. Good way to describe it, neutral. If somehow we were to get back to 55, which is where we were at 10:30 a.m., like that would be a huge victory, right? If we were able to ramp up that big in the next 20 minutes. And pretty much anything staying down here is like we tourniqueted the bleeding. Let's follow it up next week.
Exactly. And next week, we're going to have a fairly low volume week. So yes, you're right. 5,480 is going to be that first area that you want to be able to target. 5,500, I mean, it's a long way away from here. But I mean, if we were able to hit there, dealers would actually have won today. I mean, it's all about time value decaying. And that's the point here. And so if they don't want to have anything that's a really intrinsic value or be on the wrong side, you want to get 54.80 first. Like that is that line in the sand here. Next week, let's just keep that in mind. We're going to have a very low volume week, so we could have continued compression. But just be mindful that these economic data points, especially for jobs week, can actually move these markets pretty drastically and violently because of that low volume in the market as well.
Okay, a good reminder. Now we've gotten 2 weeks within 3 with a holiday right in the middle. KG, last point, a little seasonality thought here. I think everybody's thinking about election season, but let's stick with the calendar for a second as we close out June. What's up?
Yeah, so if we're looking at it for next week, I have a chart up that shows the S&P composite total volume. So all the shares that are being traded here, and I have it highlighted in yellow. That's showing us that next week is going to be the third lowest volume week traditionally that we see all year. So knowing that, probably going to see, once again, light volume, but light volume also can come with volatility and pretty aggressive swings. So don't sleep on next week. Next week, we do have some economic data that is going to be very critical to this whole puzzle when it comes to the Fed. If we do see some jobs being lost, or if we see a meaningful deceleration, that can move markets. And if no one's there to really kind of back that trade up or back the volume up, that's where we can have wild swings on an intraday basis. So that's what I really wanted to kind of highlight there, put it into context of what we see for the remainder of the year. It's 4th of July, Thanksgiving, and then Christmas is usually when we see the lowest volume.
Okay, nice, good context. But with employment right behind it too, I mean, to your point, we could get a big move. Can't sign off. America's birthday, celebrate. Okay, but come back and look at those numbers. You the man. Thank you very much, Kevin Green.